You've probably heard as a trader that you should be keeping a journal or diary of your trades to be able to learn from past trades and mistakes and see what you've done wrong to make corrections. Our guest today is Mike Toma. He's a full-time trader. He's going to talk to us about that. Mike, thanks for being here.
Hey, Tim. Great to be here.
So I assume that in your trading journal you should have entry point and your exit point. What other things should I have in this journal?
Well, those are good places to start. The first thing, I think the most critical point to have is to have a trade journal itself. I talked to a lot of traders, even some at the expo, and we talk about trade journals and trade analytics, and they really say, well, I like this setup and it's been working well for me, but they really can't granulate of how well it's doing or what type of time frame it does. But in addition to what you just mentioned, entry point, exit point, I'll even throw in risk reward, time of day, the type of setup. If you have 4 or 5 different setups that you're looking for, or that's in your trading plan, you should really mark those, which type of setups that you're taking at that time. Again, the risk-reward ratio is very important, because what it also will show is if you have a trade that you've taken, say, 3 points, so let's use the ES futures as an example. You've taken 3 points out of, well, what does that tell me? Even if it was a successful trade, was there an opportunity for 5 or 6 points on that? What are you leaving on the table? And then once you compile this data, it really, to have a trade journal is really only halfway there. You really need to apply risk analytics, or really do some thorough analysis of your trade journal, say on a monthly basis, to determine what's working for me, what's not, and what areas do I need to improve in.
So how should I use this? Do I go back and is it as simple as trying to figure out on every losing trade what I did wrong? I mean, is that possible, and then try to make adjustments from there?
Actually, the losing trades are a good data source for maybe potential developmental opportunities that you have as a trader, or to be successful in this business. Personally, for what I do for myself, and even for some people that I help in this business, I actually want to see their winning trades. I want to see, what are they not necessarily doing right. Say they had 3 winning trades in a row. Well, that's great. It's a great start. Did they follow with 3 losers? When did they cut that off for the day? I also want to see, did they get carried away? Maybe on that 3rd trade, they maybe went for a home run. Well, maybe that's justifiable. But maybe the market conditions weren't asking for that. So what I try to do is, when I do risk analytics or analyze a trade journal, what I'm trying to find is the psychological information that the data is bringing up. And it's amazing. Looking at the winning trades, you could probably find just as much information about the trader and opportunities for improvement than the losing trades. And
how about goal setting? Is that something that should be part of my journal? Do I want to actually write down, I want to make $1,000 a day or $500 a day? Should that be part of it?
I recommend you don't. And I'll get a lot of criticism from that type of theory, and we can debate over that. I love trader banter. What I really want to focus on is the risk, the KPIs, or key performance indicators, that you generate from your trading plan and from your trade journal. Really should indicate, am I following my plan accurately? You could have winning trades, but really they could have been plan breakers. And in the long run, that's not going to really help you. In fact, it can be very deceiving. So when you're looking at your trade journal and doing an assessment on it, not only look at, I had 5 winning trades in a row, and that's great, but did I break any rules? Did I use certain trade setups with market conditions that didn't apply to that? Some of the best winning trades I've had may have been, sometimes against my rule breaker. So when I'm doing my assessments, I'll actually find that out and know, great, it was a gift. The market really gives it to you, but let's focus on trading the plan and implementing a plan effectively, not necessarily about wins and losses.
Mike, thanks for being here.
No, always a pleasure.